Hey guys, and welcome back to the channel. It's me, Adam, and you are watching Unlimited Options Investing. Today, the market went up, and usually I like to sell covered calls when things are going up. Stocks are like rubber bands. The higher you go, or the lower you go from one point, it's even harder to continue going in that direction before potentially rubber banding back and reverting to the mean and then continuing that potential trend or whatever is happening at the time. So for the current market conditions, things have been going down quite a bit lately, and today with things gapping up so aggressively, I looked at it as an opportunity to sell some calls. So I'm going to share that with you guys today. Before I do, if this is your first time on the channel, welcome aboard. Hit that subscribe button here on Unlimited Options Investing. We talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, smash that like button. Let's get started. As a header, I only like to sell covered calls that are expiring at the end of the week. So all of the expiries for all these covered calls expire this Friday on February 18th. So I sold most of these calls in the morning. As we'll see in a moment, I actually should have waited on one of them. I should have known better, and I'm going to take it as a learning lesson moving forward. Actually, until tomorrow, I'm going to explain everything as we get there. So the first one we sold was Tesla, and I sold the 1000 call. I sold it for 1.13, so $113. And I believe at the time, Tesla was trading for about $908, more or less. So far for this short call, I have an unrealized gain of $45, which is just about a 40% gain. And so looking at Tesla on the candlestick charts, so I sold my call around this area over here. And even though we are higher, the intrinsic value has increased. So despite the gain in intrinsic value, whatever happened in the math with the extrinsic value when it comes to both volatility and time decay, my unrealized is actually positive. This is why I like acting as the casino or being the person that is selling the calls to the bettor or the gambler who thinks Tesla will hit 1000 by the end of the week. There are a lot of different factors to be successful in short-term options trading, especially when you're on the buying side. And taking a look at the open interest, so how many calls are currently open that are expiring at the end of the week, scrolling down, what we'll notice is that when we reach the 1000 call, we'll see that we have 31,666 calls that are open, much larger than any other strike price that's in the area above or below. And why this is important information is because that means a lot of retail must be opening calls at these prices. And what does Wall Street want to do? Not pay them out by the end of the week. So would it be surprising if Tesla was below 1000 by the end of the week? It wouldn't be to me, hence why I sold it. Also, I would be happy if my Tesla shares got to 1000 by the end of the week. Even if the call goes in the money to 1100, 1200, of course it sucks. I don't want to lose out on potential gains, but I'd be laughing at anything above 1000 personally. So looking at the open interest, in addition to the candlestick charts, I tried to figure out where those key areas are and figure out where I would be happy as an investor and a trader, and I go from there. So from where I sold the call at about $908, that would be about a 10% gain in the stock price, which makes sense. From 908 at about $90, $9.80, you get to about $1,000. And I mean, if Tesla goes up 10% in the next couple of days, I'll be grinning from ear to ear. Ideally, Tesla closes at 999, but going back to the Microsoft Word. So again, I'm about at a 40% gain, which I could have closed the contract today, but I decided not to because I'm confident moving forward. I might be eating those words tomorrow because as anyone who trades options knows that, let's say you have an expiry on Friday and Thursday after the close, things are looking great, you're at an 80% profit. By Friday morning, some news has come out and all of a sudden you're down over 100%. It happens, it sucks, but you live and you learn. The next stock that I had sold a call on was Coinbase Stock. So I sold the 225 call for 1.3 or $130, and by the end of the day, we were at 0.75. When I sold this call, Coinbase was around $205, give or take, around 9, 10 a.m., around maybe half an hour after the open. If we take a look at the candlestick, the price had gone up even more from when I had sold it to about 208, 209. But similar to Tesla, I'm still at a gain of roughly, again, about 40%. Same kind of idea, even though the intrinsic value increased, the extrinsic value had even more of an effect by decreasing that much more. Intrinsic value is the easy part, but extrinsic value, volatility, and time decay, those ones are tricky. A couple of arguments as to why I chose the 225 call. Again, other than the fact that most technology stocks gapped up today or went up significantly, especially relatively to where they closed on Monday. So this is the first thing that was intriguing me, that I was able to sell at a more attractive starting point. I see the 225, 220 area as dynamic resistance. And another big reason why is I'm tracking the price of Bitcoin almost every day. And if you watched any of my crypto videos, I always reference these trend lines and these major resistances. Even though technical analysis isn't everything, it's been pretty steady so far that it's actually been pretty accurate. So what I'm seeing here is we're near that $46,000 mark, which is a key resistance point. And because Coinbase is heavily affected by the price of Bitcoin and Ethereum, we don't have that much more potential runway for reward unless we break through this $46,000 mark, which doesn't seem like we're there yet. I mean, it could happen tomorrow, and then all of a sudden I will be definitely down on my covered call. But if we're unable to break this $46,000 mark, I don't know if we're going to be able to break the same resistance when it comes to Coinbase around that $220, $225 mark. Likewise, if we look at the options chain on Yahoo Finance, the 225 has about 1,230 open interest, with the 220 strike having even more at 3,403. Not nearly as much as Tesla, obviously, but relatively speaking, 3,000 is the highest one we see here. But I've seen plenty of times as well where the open interest area will get smashed through, so it isn't, again, 100%, nothing is. Again, these are just potential indicators, and then you can make your judgments from there. Again, a similar situation to Tesla where I was up by the end of the day. I could have closed my position and then started a new one tomorrow, depending on what's happening. But again, I'm feeling pretty confident heading into tomorrow that I can get even more theta decay and buy it even lower than it is now. And the last cover call that I sold today, and probably most interesting, was Airbnb at the 195 call. The reason why is today they are reporting their earnings. And why is it advantageous to sell calls when a company is about to report their earnings, or sell options in general? Even puts would work in this instance. But personally, I like only selling calls more than puts, but I mean, there's a time and place for everything. But the big thing was the IV was at 105, which is much higher than it usually is. The IV for Tesla or Coinbase was around 50. Airbnb's is 105. And the main reason people like to sell options right before earnings is because once the earnings is reported tomorrow, an IV crush is expected. And even when the price action goes against you, there's a high chance that the IV crush will save you. So use me as your prime example of this. So I sold the call in the morning at 1.5, so $150. And I knew after I sold it, I'm like, you know what? I should probably wait until the end of the day. But you know what? What if this is the top? By the end of the day, I might be wishing that I sold it in the morning. So I'm like, you know what? Let me just choose a strike price that I'll be happy at. I choose 195. Whatever happens, happens. And that's exactly what did happen, because the price at the close was 2.53 for an unrealized loss right now of 1.03 or $103, which puts me underwater at about negative 70%. And the ironic thing about this is that even though I'm losing on Airbnb, it actually has the lowest delta of the three. What does that mean? Which means that it has the least chance of actually finishing in the money by the end of the week. So I sold the call in the morning when Airbnb was around 172 in the low 170s. By the end of the close, we were at about 180. So obviously a big increase in intrinsic value. So most importantly, how did Airbnb do after hours? Right now we're at $188.50, up about 5%. So I'm fairly confident that tomorrow at the open, even though again this went against me in that direction, I'm fairly confident if we open up tomorrow at about $190, that this unrealized loss is likely going to be a gain at 10, 20, 30, 40, 50%. I'm not exactly sure. I'll give you guys an update tomorrow. I'll likely close my position and maybe even open an Nvidia one, which with that stock tends to always go against me and finish in the money. So hopefully I'm able to farm some good premium tomorrow. Otherwise, that is the end of my video. Thank you very much for watching as always. I've been able to sell a lot of covered calls lately because of earnings season and being able to take advantage of the high IV. Let me know in the comments below. Do you sell covered calls? Do you trade options? Let me know in the comments below. As always, like and subscribe, and I will see you in tomorrow's video.